Hello everyone, this is Piyush from Project Learn. Today we are going to have a look on behavioral finance for people who are professional trader or working in stock market, or they are looking to work in the stock market. I'm also a student. I'm using a Feynman Technique to study the details of stock market and get into trading. So coming to the next page. So why should you give me your 10 minutes? First of all, there's a disclaimer. Second, we are going to study the brain scenarios, what is addictive about the money, and why these lottery scenarios and option trading are more addictive than any other form of trading. And then we'll study about the reflective and reflexive brain, and then we'll take a small study of how to improve our reflective brain and for better trading and investment purposes. So disclaimer, here it comes. I must emphasize that I am not a financial advisor and the content of this video is intended solely for educational purposes. Any investment or trading decision made as a result of watching this video are the sole responsibility of viewer. It's important to understand that investing in the stock market involves inherent risk, and I strongly recommend conducting thorough research, if necessary, consulting to a qualified financial professional. This video is created with intent of facilitating learning through the application of Feynman Technique, which I'm doing right now. So, why winning is so much addictive? There's a situation, suppose we are people who usually do not buy lottery tickets because we know the odds of getting a big win is really low, because it's a game of chance, right? There's 1 in a million chance that you win a lottery. So that's why most of the people don't buy lottery. But suppose if you purchase a lottery ticket and you won that, your brain will give you euphorias to buy again because you have made 1 in a million chance. So your brain will start producing hormones that will make you to buy the lottery tickets, and it is more a game of anticipation. We try to predict future. As a human, our entire life is based upon anticipation of things, chances, a game of hope where we dream about getting things big, winning big, right? Having a big house, beautiful wife, a lot of money, a party in champagne and all of those things. So we humans, we mostly do our decisions on the basis of anticipation. Okay, so there's the fun part. Thinking about winning is not actually winning, right? So if you suppose purchase a lottery ticket and you're daydreaming about having a car, wife and all of those things which money can bring to you, it is not winning. You are just anticipating it, you're thinking inside your brain, you're just contemplating things, you're not making that progress in your life. So that is why hoping or thinking about getting a victory is really harmful for a trader, for an investor, or any person in general life. Suppose you're starting a business and you think like, I'm going to make profit by 20% profit, 30% margin on a sale of a single product. Yeah, I've made 1 crore rupees from a single trading of a land, or made a deal for a land. So that is the problem. We anticipate our victories. We try to feel it by thinking about it, but in reality we are not doing anything, and this is a disaster for our P&L. So let's take a look at a single thing which is called two-brain theory. So it is not a deep financial theory, or it is not a deep neuroscience theory. It is just a basic understanding of your brain. So suppose you're trying to do something, you are in sports, suppose you have taken a boxing match. So for initial 1 or 2 months you will be getting beaten a lot, but once you start to train with your coach, he will be making you do repeated motion, your reflex will improve, Your brain will try to improve your reflex. Same goes with any form of sports. Suppose you heard a loud bang of a Diwali cracker. What happens? You turn around. If you panic, that's your reflexive behavior. Your brain is trained to behave like that in a scenario of a danger. Or suppose something good happens to you, you get excited without properly looking at the data, without understanding the real situation. What is done by the reflective part of the brain, which takes data, which analyze it. Suppose a firecracker goes beside you, you turn around, you don't panic, you see what happened over there. You try to have a situational awareness before you make any reaction on that particular incident. If you're getting a good trade, you still try to understand the scenario, what is happening behind the trade, why I'm making this money or why I am losing this money on this particular trade. So this is about reflective and reflexive brain. So you have got a small idea what is reflective and reflexive brain. So let's jump into how you can improve your reflective brain, because in trading it is all about reflection. Your intent or your intuition won't make you rich. That is a simple understanding, because luck never works every time, right? If you purchased a put option or a call option, you don't have surety because there are a lot of things involved under the hood. You have you have option Greeks, you have delta, which monitors the rate of change of the underlying, right? Then you have gamma, which monitors the rate of change of delta. And there is theta, which is a time decay. There's vega, which is related to volatility. So there are a lot of underlying things that is happening. So in trading options, that won't be helping you a lot. Your luck is not going to do anything. You might be lucky, you might be 1 in a million person who gets everything right every time, but that is not for everyone. You might be lucky, not everyone is lucky. Everyone has to look on the data, right? So we have to do smart thinking of the market. So how we can improve it? First of all, there is a part or section in Zerodha's varsity program which says learning option is best done by trying to trading options again and again, repeatedly trading the options, because that is the only way to do. But you must have the understanding or a framework how these things work, right? You cannot be a KP in first day, because you have to understand the basic. You have to get trained again and again on the data, right? What is the basic of stock market, why there are options, why there are future contracts, what is volatility, what is time decay. All of these things should be known to you. You must have the understanding of fundamental analysis, you must have the understanding of technical analysis, you must have understanding of future contracts and option contracts, and you must have understanding of your broker terminal, because that is also important part, right? You cannot just push button. You have to train yourself few days or few hours to get understanding of your terminal. Then only you can put trades and do a proper logical trading proper logical trade on that. So that is from my part, and this is all I have to tell you, because this is a Feynman technique. So what I am doing is explaining in front of camera that what I have learned. If you like it, just like and subscribe it. You can help me to learn about the stock market, and I can also reflect on the point that you can tell me in the comment section. So see you next time, and I'm going to upload this video just like it is. I'm not going to make any edits. I'll take a look on the video, like, because there's a small section that I have to cut in front of the video. So that is important for me, because there's some unwanted information available in this part of video, so that's why. So this is Piyush. Let's see you again in this video. And if you watch this video, if you're the first person to watch this video, just give me one like, and I'll be making the next video.